Hello, good morning. How are you doing? I hope you're all doing well. It's Tuesday and it's the start of a new week. Yesterday was not as much as we want to see price do what we want it to do. Today going forward is when I expect to see more visibility in price in terms of where I want price to go. So let's jump into obviously the dollar as usual, and note where price is hanged, or price is now at the 93.42 level. Okay, and price is stuck there right now. So what I want to see today especially is this one, just for today, today's trading session. We had a gap in here. Okay, we open and we gap down. We've gone through it, so that's a good sign. We have a short-term high in here. We've rejected a lot of lows. One, yeah, we rejected that low, went up, and then came back down and rejected this low. So that's twice that they've tried to go down, and then we see a rejection. So what I want to see now is price to break this high. Okay, once we break that high, I will be looking for price to come here for today. Therefore, in the foreign currencies, we can take some short-term trades. So on euro, we can look for downside objectives based on the 1 hour, just for today, if we do get pullbacks. So on euro, you can see we traded to that shaded area, which was where I was expecting price to get to. Yeah, that shaded area, 70.5 level, and then we've seen that rejection. So we've now broken, if you look all the way up, okay, we've broken this down candle. On the 1 hour time frame, it's not as clean, but if you go into the 15, you see beautiful breaker in here right now. Yeah, we had price run up and then took out this high, and then we've broken down. So that's a beautiful breaker, sell in there. And looking at what price has done, okay, let's put in the areas of accumulation. So that there's that area there, there's this area here, and we have this area down here, which is all yesterday's traded. If you do get a pullback inside the breaker again, you can take a sell for just today, going into New York. Maybe we'll get a pullback, and then you can sell short there, and then you target here, okay, this low. So if you do get a pullback, then that would be a good idea. They've already dipped into that breaker. You can see we broke it right there, and then they dipped into it. Okay, and then price is rejecting. So there might be chance that they will come back into that same level again, and then a continuation to the downside. And if it doesn't, then place your stop above this high, and then look for downside objective here. Okay, because they've already run 2 levels of stops, so I don't think price is gonna come up there again. So look for a target below here, and then hold on to some of that position, and see, because that might be the turning point, right, for us to come all the way back down. For now, we need to break at least the 1 hour and the 1 hour has been broken, the 4 hour last down candle, which is all the way down here. Okay, we need to break that before we can see price now resuming to go lower, because at the moment the 4 hour is bullish. So we are just playing the 1 hour trend. 1 hour has broken, so we are trading inside the 1 hour trend with the 4 hour. So the 4 hour, if you measure the range, the reason why you're taking profit here is this. Okay, price might retrace all the way down into 618 and then reject and continue going higher. So for the short term basis, you can take a short to there and then hold on to some, because it might be the turnaround to break this low and then we get continuation to the downside, if that makes sense. Okay, so based on the 15 minutes, we've broken to the downside, so I'm expecting price to continue to go lower. There will be bounces. Okay, it's not going to go through in a straight line. There is going to be some bounces. So if it does hit this, it's going to bounce and then it's going to come back down and break it, and then we have this next level and bounce, and then it's going to come back down and break it. If we take out this area here, if we break that area, then I think we've turned around and we'll be looking for a run down here, and that would be a good thing, because once we break this, that's the 4 hour level, the 4 hour swing low basically. So if we break that, then we do have a lot of room to the downside, and then we can start looking for swing trade ideas for price to return to that breaker. So this is what I mean. If we do break that area, then we'll be looking for swing trade ideas. So we might get something like this, and then we look for downside objectives, which is somewhere down here. All right, so for now, let's take it one step at a time. All right, pound dollar price fell short, didn't take it, the high. I think that must be an engineered level, so maybe they might come back up and run it. It's not necessary. They've run these equal highs, which is right here, and they've run that, and they did run the rejection. So on the 15 minutes, it's similar to what the euro is doing. We do have that down candle sitting there. Price has not retraced, but between these two, I will go for the euro. Okay, the euro is more clearer. Yeah, the euro is more clearer than the pound, so I'll go for the euro. However, it's the same dollar pair. Okay, so you can decide to go with this as well. That's entirely up to you. Let's go back to the 1 hour. This whole move to the upside is not clean. I don't like it on the 1 hour. So on the 4 hour, we can see our last down candle is this one inside this swing low. So if we do break that, then we will be coming back down to take out this low. The daily is still bearish, so if we do take that, we will have a bigger swing move to the downside. Right, I just suspect this. I suspect they might want to hit this first on this particular pair, not on the euro, but on this particular pair. They might want to run this, run that high, hit this, and then reject, and then go lower. Okay, so like I said, between these two, I will go for the euro rather than the pound. Okay, That's the New Zealand dollar. Again, between these two, I'll go for that one. Yeah, this is the one I was looking at this morning when I woke up. This last up candle on the 4-hour, that's the one I might be interested in. So if you do get pulled back into the down candle here, you can consider a sell at the opening, the closing price there. That's at the same time the last up candle, right? So before I continue, I did have a trade idea on Euro New Zealand. I want to bring your attention to that one. The one we talked about yesterday. You see that you take a short from the down candle or the last up candle, okay, whichever one, and price is rejecting. On the 15 minutes, I wanted to see exactly this. I wanted to see this thing break. So if we do break and you've missed the entry, which is either here or there, if you've missed any of that entry, then you can by all means do take with the breaker occurring now. So if you missed the ideal entry, you can use this breaker to get an entry to continue going lower. Your first target is down here, okay, and it's coming from yesterday's session that we did, right? So I thought I'll bring your attention to it before it moves away. Alright, so let's jump back to this two. So as I was saying, between this and Aussie, this one looks cleaner with the move away than that one. That one is a bit of a mess. So I'll go with this as a trade idea for a move to the downside. Now, the wick, okay, the wick went all the way up. It didn't take out this high. So you can do this, but have in mind that if you do break above that, trade idea is not good. Okay, you can do this and go out and do whatever you want to do, right? But if we do break above this high, then the trade idea is not good, because the last up candles there, this was just a run on stop, and I'll show you how they did that on Aussie New Zealand, because I had a short on there and then it ran up to hit my stop and then rejected. Okay, it did the same thing. So I'm gonna show you right here. You can see, so I had my stop loss here and it ran up, hit it, and then reject. Okay, so you can, let's go back to Aussie. You can leave your stop up here, right, and then just go out and do your business. I think that's what I should have done when I was going to bed. I should have placed my stop above there, because I was taking it based on the 4-hour. So I should have left my stop above this last up candle, but I did leave it on this two down candles as the breaker, and then it did tag me out and then dropped. Okay, so going back to this one again, you can place it at the high and then just go about doing your business, or you can leave it here if you want to catch if you use the risk to reward tool. Okay, this one will give you a bigger lot size to take the trade. Let's drop back down here. So if you use a 15 pip stop loss and you use the risk to reward tool, 15 pip stop loss will give you a bigger lot size for you to take the trade, whilst if you take with a 30 pip stop loss, it's gonna give you a smaller lot size to take the trade. So it's all entirely up to you if you want to be safer, or you want to be aggressive and say, okay, I don't care, I'm gonna short here with a stop with 15 pips and then risking whatever percentage that you're going to risk is going to be the same dollar amount. And if you put it here, the percentage that you're going to risk is going to be the same dollar amount, right? So it doesn't make any difference. It's just the lot size that is going to change if you use that model. Dollar yen. On dollar yen, we have broken to the upside here, and I said I am looking for price to come back and run all the sides. This is the last down candle and it found support there and then pushed higher. Price is now coming back down for retracement, so I can measure the mean threshold for support. So the mean threshold brings me to this down candle, so I can use that down candle as an area of interest to go long again. Drop down to the hourly to refine the stop loss. Yeah, I think if we break below this low, this down candle is not good trade anymore. Or if it does, so if you get stopped out like this, yeah, if we get stopped out like this, because you're buying this whole, this is a 4-hour down candle, right? But inside that 4-hour, this down candle is the only important thing, because it has a gap in here and then 2 down candles. So that's why I'm placing my stop there. You can decide to place it here for peace of mind and then go about doing your stuff. If you put it here, you might be worried and be thinking about the trade, so leave it here and then go about doing the business. And if this one stops you out, then wait and see a rejection, because they might want to probably just drop it down. Okay, so if this happens to stop you out, then you wait for a rejection before you start looking for re-entry. If not, then if it stops you out, let it do what it needs to do, and then later you can also find an entry. Okay, so that is this one. But your target, you're targeting, so let me push this one. You have this equal high, and I'm looking for a bigger run above these highs. Okay, so for now that will be your target. We have this last up candle and we do have a higher high in there, so potentially that could, let's go on the 4-hour. Where am I going? There. Yeah, we do have a high high and that last up candle, so you want to take your profit above this high. Okay, you don't want to hold on to that one, all right, because price might not give you that. So your first target is always going to be above this equal high, right? And then you leave that rest on to tackle this high. And if you that, like I said, if you that stop you out, all you have to do is just wait and see what price is gonna do. Dollar CAD, you can see I still have my drawings in there. We have dropped into that low gap on the 4-hour here. Yeah, hit it perfectly and then it rejected. So what I want to see now is, based on the lower time frame, which is the 1 hour, are they able to break a swing high? Let's get rid of. Alright, so what I want to see now is, are they able to break a swing high, which is this one here. Okay, are they able to break that? If they do break that, then depending on how they break it, that will give me some clues on how to proceed on this pair, right? But for now, I don't see any smart money coming in, right? I don't see them in here. at the moment. This is just price dying off. I want to see something like this, boom, break out above that high, right? Then that will give me the confidence to you might have missed that, because that was my midnight. Oh, okay, 9:30. Yeah, that's fine. It doesn't make any difference. They've already priced that in. They've already priced whatever they need to do in the market, so it doesn't make any difference. Yeah, they've price has shown displacement, right? It's shown willingness to drop. Okay, so if you want to wait, because they might bring the news out, and then that will cause price to retrace, because you're not supposed to enter now. I didn't say enter now. Yeah, you're waiting for a pullback, so maybe the news will bring it up there for you to get an entry. Okay, so don't worry about that. As a matter of fact, if the news comes out and it pushes it up, even better. Where was I? Yeah, so on this one, like I was saying, I've not seen smart money come in the market yet, so just wait and see if they're gonna come in, because when they come in, like I've taught you, you will see it. It'll be an elephant in the room move, and it'll be obvious. Okay, right now it's not, so patience. Dollar Swiss, same thing, patience. We've reached the level I'm expecting them to start coming in, so they're not in here yet, so patience. Euro pound, another pair that has gone silent, really absolutely not doing nothing. We have this quick move away from that last up candle, so that will be an area you can consider sell. Okay, and if that stops out, then you have this one to consider sell. And based on the weekly time frame, for us to be bullish, like I said, we need to close above this high. Until then, this thing can just keep going back and forth, and keep killing people's account, right? So you want to be careful trading this pair. You only want to trade at high probability areas, which is this one, that one, and then if we break the 4-hour market structure, that's it. The rest, don't be interested, right? And back to the one that stopped me out. I woke up and then I looked at my I have my phone always near me, so I woke up and opened up TradingView, and then I saw this and I was like, crap, that thing stopped me out, because I could see where it went, and it went above that high, and that's where I had my stop loss. So that thing stopped me out and then did this, so I didn't see it. I went to bed. I wanted to be awake for the news rate announcement, which was around 4:30. Yeah, I wanted to stay up, but I was able to stay up to 3:30, and I couldn't stand it anymore, so I went to bed. But before going to bed, I did do this by placing my my TP, first TP right here, based on the 4-hour right here. So in case that if the news comes out and it's pretty wild one, then it will just kick me out, as in take my TP. And then because I didn't want to leave my stop there in case the news comes out and it rallies, because during the day I had my stop loss above here and then going about doing my stuff. Okay, so when I was going to bed, because of the news, I thought, okay, if it's gonna go up, then I might as well get stopped out here instead of being stopped out there, right? And then it did exactly what I thought. So don't think okay, don't think about you being stopped out, because you end up being stopped out. Okay, and then price rejected. So if you did take this trade based on the criteria, then keep hold on to it. First target is still there. I'm looking for price to come here and then potentially run this low for the week, and then next week, because next week I'll be looking for buys going into second week and third week of October. So I expect this thing to keep dropping, and then next week a rejection to continue going higher. All right, since we have the news in 1 minute, we might as well stay on Aussie and see what price will do, and then after that news, then we carry on. Alright, that is your entry right there. Yeah, we break it, price comes back, hits it, and then reject. This is the retrade. Retrade, and then when it comes back in future, that'll be a retest. So it's 9:30. Let's check and see if anything happened. Yeah, I don't think much is gonna change. Nothing much. It's not as heavy as other news, other high impact news. All right, so let's just carry on. If it does pull back, that would be great. Great to get an entry. So yeah, keep on to it. Let's see if, look at that candle. So wicked one, done on purpose, absolutely done on purpose. It went for this high. You can see nothing in here. It went for that high, because that was an important high. Let's go back to the 4 hour. So we have displacement on this pair. So if we do pull back to, I think we might have a breaker on the 1 hour. Yeah, we do have ourselves a breaker here, and price never got back there. So if you do pull back inside that level, that can also offer a re-entry. Okay, so maybe I'll get an entry there to make back whatever they took away from me. Right, so if you do get a pullback inside this last up candle with the breaker, you can get another entry to send price down. Okay, your first target is always still going to be there, and then look for possible run below here, and then next week we start looking for reasons to go long again. Euro New Zealand, I've already brought your attention to it from yesterday's session. Okay, so it's still gonna be that trade. Based on the 4 hour, it looks like we've broken up on the 4 hour, but the daily is looking sideways. So first target, I want you to not take it below that, but take it here. Okay, so first target there, and then this level is looking something of a high probability for a long, but not a long to go up, but a possible long. Maybe it's gonna bounce in here. Yeah, so maybe we're gonna get something like this. Yeah, we might get something like that, and then ultimately a break, probably with the strength on New Zealand. Yeah, maybe you get a break, but it's not gonna go through this and go down here for you to take your profit like that. It's not going to do that straight away. So first target there, and then you also take something if it gets in here, and then you wait. Just let the trade do what it needs to do, because that level is high probability. That down candle here took some liquidity below this low, so it might not break it straight away, but over time it might. Okay, because that's a 4-hour time frame. All right, jumping on to Euro Aussie. We have weakness in Aussie, so I'll not take this one, because if you sell this, it's like you want Australian dollar to be strong, and at the moment it isn't. Yeah, at the moment it's not strong, so you don't want to be taking this as a sell. All right, so leave this one alone. Same thing with this one. At the moment I am so, I don't know what they want to do with this pair. Why? We have this swing high in here. Price gave us a redistribution, and then we went down, and then we've just rejected, and it's coming back up, right? If you look on the weekly, this last up candle is either gonna send price down, or it's going to be a breaker. So it's either it sends price back down and take out this low, or we're gonna close above this, and then we start looking for higher prices, right? So it's a bit tricky to trade it right now. If you want to trade it, then I'll suggest you just go with the 4-hour trend. Yeah, I am looking on the higher time frame for high time frame directions of high time frame trades, because it's not giving anything meaningful for us to take that. Then you can go with the 4-hour trend, because 4-hour trend you can get something at least 50 pip or even 75 to 80 pips trade on the 4-hour trends. So you apply the market structure concept that I've taught you guys. So right now we have broken to the upside here based on the 4-hour, right? So what you can do is you trade with the 4-hour trend. So on 1 hour, every retracement you can apply all the entry techniques that I've taught you. So if you do retrace down to optimal trade entry, you can take a long. If we do retrace to this down candle, you can take a long. Or if we do come back down and then in here somewhere they form a short-term low, run it and then reject, then you can buy the breaker as well. So you can use all the entry techniques to take trades on based on the 4-hour trend. Yeah, you can take trades based on the 4-hour trend, and then once we get a meaningful actual high time frame confirmation of what price wants to do, then we can take advantage. For now, it's not giving anything. Yeah, it's a bit all over the place, and it will be tricky to say, okay, I'm gonna sell short here, I'm gonna sell short here because we have what, a high and a high. I'm gonna sell short here and then look for a downside objective down here, but the 4-hour is bullish, so we might get that, and then price will come back down and then reject and then go higher. Okay, so you don't want to be doing that for long term. So you have to trade inside a smaller time frame, and then once we do get price to give away its direction based on you trading on the 4-hour, then we can have a meaningful trade to a particular direction. All right, so let's wait for proper direction based on the higher time frame. But like I said, you can trade a lower time frame and use all the entry techniques that you have learned to take trades. Okay, another one is the I said it's more advanced, that you will have to learn to trust it, and that's the fair value gaps. You have to do it like for a month, so I don't expect you to be doing this now. Pound New Zealand, similar brother to Pound Aussie, nothing. So if you want, you can trade on the 4-hour trend direction, but for long term we don't have anything yet. All right, so I'm gonna wait till I get more information, then I can make a proper decision what price wants to do, because this didn't come down here. Based on the weekly, nothing. Yeah, based on the weekly, we have absolutely nothing going on. I can argue and say, okay, price hit this and then it went up, but that will be after the fact, and I don't like trading after the fact. Yeah, I like to trade it before it does form. So I'll wait to see something that is clear, that I can see this is a clear. If price does get down here, there's a high probability we might go higher. So then if it does get back here, then we wait for breaking structure, then we can buy. But apart from that, there's nothing that I can frame a trade on for long term. Right, so we're gonna wait or just trade the lower time frame. Okay, so lower time frame, you do have everything to trade lower time frame. Right, I've taught you everything that you can use to trade lower time frame. If you want me to give you an example, it's just market structure. Right, market structure. So find your trading range. Okay, so that was a 4-hour swing high to swing low, and then we broke down. So when we broke down, you have to now find your swing high and your swing low, and that is your if you want to be bullish, okay, we need to close above there. If not, then we are bearish. So if you are bearish, then you can sell on the 1 hour and 15 minutes. You can sell up candles, you can sell breakers. So let's drop down to the 15 minutes. So inside this high to that low, in here, you can sell breakers. So anytime you see price does this, yeah, you can sell that one, or you can sell a bearish order block, or you can sell a short-term high being run and then a rejection. And you can see examples as I'm showing you inside here. Yeah, so inside this shaded area, we had a run on stop, we break down, price comes back, optimal trade entry, or selling the breaker, okay, and then price drops down. So inside this shaded area, those are the kind of trades you can take, but you want to be selling, not buying, because of the 4-hour being bearish. Okay, so that's how you're gonna apply selling in the or trading inside the lower time frame. Okay, all right, let's carry on. Think this one spiked up. Okay, it didn't. That's way up, all the way up there. Also, don't forget the swing high, swing low strategy. If it does, it looks like it's presenting, just to bring your attention to it, it looks like it's presenting an engulfing candle. Okay, price took out the high and then took out the low, and it closes below. That is very powerful bearish signal. Okay, so if you do get that, then tomorrow we can place a level here and then expect price to open and hit this low or the opening price, and then we see a move to the downside. So don't forget that as well. Okay, Aussie yen, yep, this is exactly what I outlined yesterday. Looking for a run above this high and then a rejection. Why? Because that is previous week high. So if we want them to go down, we want to see them run previous week's high and then reject. So based on the 4-hour, if we take out this low, this down candle, then we are in for price to come back down here. On the hourly, we have broken to the downside right here. So if we do get back up there, which I doubt it might, but price can do anything. Okay, price can do anything. So if you do get a pullback inside there, that would be a good place to consider sell. Again, with your stop above this up candle, and then look for potential move to take out this equal low. Yeah, we have equal low in here, so you can look for price to come and take that one and hold on and see, because once we break that, this is a 4-hour swing low prior to this whole move to the upside. So if we do break that, then we'll be looking for price to come and take out this, and it looks like, personally, it looks like it might want to do that. So just wait for price to give you a pullback on this one. Do not chase it because price has moved away. You also want to look at this last up candle, right, and see if we close below, because if we do close below, that will also give us a bearish engulfing, which will signify that there is a lot of selling pressure here. So price has taken out the high. So if you manage to close below this last up candle, then that will signify a lot of selling pressure. Okay, so either you sell here or nothing, or wait for price to close here, and then tomorrow we look for a sell to continue going lower. And between those two, I'll go for Aussie yen. Right? Why? Because we see New Zealand gaining strength, so you don't want to be selling this one. However, if this one happens to give out, then by all means you can also take this short, but let this low give up first. Okay, for New Zealand yen, you want this low to give up first. Do not sell it, this up candle, because the 4-hour is still bullish here, and we don't have weakness in New Zealand. We have the weakness in Aussie. Yeah, we have the weakness in Aussie, so you don't want to be, if this happens to do the same thing that Aussie is trying to do, which is close below this one, then going forward we can start looking for some trades. Okay, but until then, don't do that. Euro yen. I've already outlined this, so I don't need to go over it. That's what we are looking for, right? So I'm gonna leave that there. This looks very promising. I like the move away from the level. Okay, and they've already taken some stops here, so this is very decent trade for continuation to the upside. All right, so I'm gonna leave that one there. They've also broken up. Yeah, so it's very decent. Look at this down candle, the high or the opening price. That can also be an area where price will hit and then reject and then start going higher. So if you do get here and you see a rejection, okay, and we break up, then you can buy as well. Based on the 4 hour, that level looks, the level down here looks looks interesting. But if you happen to have price hit this and it starts accumulating, or you see a breaking structure, then you can by all means do this. I do have this level down here just in case they want to run all the way down. Then that is what you do. All right. Let's get rid of some of this brush. Pound yen. Let's go on the daily first. This one is a mess, even though it's gradually grinding up. I don't see smart money in this. This is just probably a pullback on this pair. Because smart money doesn't buy like this. So I don't see elephant in the room footprints in here. On the 4 hour either. The only place I saw their footprints was right here. Okay, you see price run away quickly. So this down candle is where I saw them in, and then the run below this low. The run below this low is also looking like smart money did do some business in there, but that move away was on the 1 hour. That's why I have this 1 hour level here, because that was where they run stops here, and then the move away was very good. That's why I have that level. But apart from that, I don't see anything. Based on the high time frame, there's nothing on there. On the lower time frame, we do have this area, yeah, with that move away, and then that one with that move away. So this is a level to consider. All right, CAD yen, another level to consider on CAD yen is here for a long. Let's get rid of that one. And if that fails, then that is the level I'll be watching. Okay. Euro CAD, they failed to close above this high, so I will be on the sideline. I don't feel comfortable buying this here. It just doesn't feel right because they failed to close above that high. Right, so I don't feel right. You can do it all the way down here. You can have that one as your entry if you want really tight entries. But looking at this run here is too energetic. It was like in a rush to come and take out these stops, so it might be a manipulation to send price lower. I just don't trust it, because the way they run up, okay, if they had closed above this high, then I'll be confident. But the fact that they run it all the way up and then reject it, to me, it's looking like a bit of a suspicion that they were manipulating price and then to send it back down, because they've got some nice equal low. All these lows are higher lows, so that looks like a trend line phantom where they will come back and kill. You can see 1, 2, 3, 4, so they might come back down to clean that one out. So I don't want to be involved if price does that. Okay, so I'm gonna leave this pair out for now. That's cute. Price almost right. I think it did come to that one. That's the fair value gap entry technique. Yeah, that's the fair value gap. I was looking for it to come here to close it in, but it has. This is a typical example of a fair value gap. So with fair value gap entries, and the reason why this is advanced and you have to trade it over and over and over again is this, okay? Because you have to be comfortable taking the entry here. Yeah, you want to be comfortable taking the entry here and then placing your stop loss below this candle's low. Yeah, that's how you take fair value gap entries. But I give you protection so you don't worry about the trade. All right, this is advanced entry. You might not understand why price just decided to reject and go higher. The reason why is this fair value gap. With fair value gap entries, you have 3 levels you can use to enter a trade. You have the low, which is that, the middle of the gap, which is where price bounced off from, and then the low of the gap. So the high, middle, low, you want to take one of them. I gave you the low, right? Because I don't know how far they want to go, so I give you the low. But it seems like they went for the open and the main threshold. So I'll still leave this one here just in case price decides to reject and come back down, right? If it does that, then you do have yourself a trade. Okay, let's drop down to the 1 hour. Maybe it's running away. Let's have a look on the 15. Based on the 15, again, this is something that all the techniques that I've given you is something that you really need to practice. If not, you're gonna miss out trades. So that's a breaker trade, and you'll be wondering, how is that a breaker trade? So we had this low, that high, and then price hit that level, and then we broke above it, and then price finds support at the breaker and it's heading higher. So that's a lower time frame trade. And then you look for the same thing. If you want to trade it on the higher time frame, you look for same pattern. So our low, our high, our low. So you want to wait for this high to be broken, and then you can take an entry. So the same pattern you see on the lower time frame, which is the 15 minutes, is the same thing you'll be looking for. Actually, our high is right here. Okay, so the same pattern you look for on the lower time frame is the same thing you look for on the higher time frame. So you look for price to run this high and then wait for retracement, and then you can buy. Okay, So the entry patterns is for all time frames, but you have to have context. The context should be, okay, where is that forming? And you can see this one is forming at a predetermined level that I expected price to bounce off and continue going higher. So once you have that predetermined level, once price gets there, then you start looking for the entry patterns to form. Okay, so this one is gone. Don't chase it. Let it offer you a an entry, then you can go in. As Aussie CAD, I'm still waiting. Price has moved away quickly, which is good, but for now, for short term wise, okay, not for long term, for short term, we do have a breaker in here. Okay, so we had price run these stops, and then we broke down with high energy. Okay, so then we have the down candle sitting right there. So for short term wise, you can take a breaker trade like this, right, and then look for, I think that will be a target, because that's the breaker. Yeah, for short term, this is a trade you can play with, right, for price to come back down here. But I guess you have so many trade ideas, you have to pick and choose. Okay, so you're looking for price to come back to this breaker. If you do get up there, you're looking for price to hit this one, and then you're done for now. Bitcoin, I think they might run it up again. This is the I think the fourth entry technique, where you do have price has to get to a level, and then they fail short to hit it. So that running these stops, you sell above that, and then look for a move back down. So you can sell here, or you can wait for price to come and hit this breakdown, and then you sell the last down candle. So that's your entry technique application. So you do have this last up candle that price is supposed to go there and rebalance and then drop, but you can see it didn't get there. So once you see that, the reason why I said this one is a bit hard is you have to do it over and over again and then gain the experience, because you've seen an example here, and I think I've showed you a couple of examples somewhere else. So the more you see these examples, the more you're gonna trust it, and then over time you will see it when it's happening. Okay, once price is going up and you know that price is supposed to go and hit this level, and it fell short, as soon as it does that, you get excited, because what you can do straight away is, okay, I know what they're trying to do. You sell your sell limit up here, and then your stop loss goes up there, and then it just go away. Okay, that's what my mentor does, because he knows that price is meant to, because he's been doing it for over almost, I think, over 30 years now. So when it does form, he can see it way ahead, and then he gets confident in selling above these highs, because that's his entry pattern. He likes selling above highs and lows because he understands what price is trying to do. I'm still developing that, and I'm still gathering experience of this. That's why I don't take this once, but it's also an entry tech, very good one, because you get the highest point. You're not chasing, or you're not trying to get into the market early. you understand what is going on, so you're trying to get in and then go with the flow. All right, so that is something to consider. Gold. On gold, I like this down candle and then move away. The only thing I don't like is the fact that they didn't close above this high. Yeah, but I like this. Very, very nice. We also run some liquidity down here, so it's looking an interesting. It's looking interesting. I like. If I'm looking for a buy, this is the signatures I want to see. I want to see a down candle. I want to see a stop run. I want to see a fair value gap. I want to see a quick move away. All that is a signature for my buy entries. So for gold, based on the 4 hour, you could do this. For now, maybe 1 to 1, very easy. And then based on the daily, we might want to come up in here. If you drop back down to the 4 hour, so based on the daily, we might get something like this. Okay, so if we do drop down into there, could look for that 2 to 1. That's not bad. If you drop down to the hourly, yeah, it's looking good. Even if it gets all the way down here, that down candle is also not bad, because they did use that down candle to grab stops below here and reject it. Like I said, the only thing I don't like about it is the fact that it couldn't close above this high. Apart from that, everything looks good. And then finally, oil. Oil has rejected quickly to come back and fill this inefficiency or this void. So we could see price come all the way up and fill up that one and then reject. Okay, based on the daily, that would be this last up candle. Okay, that's where we are trading. It's a bit tricky on this, because our last swing low is here and our last swing high is all the way up there. Okay, so we are trading inside this range. Remember the market structure concept. So inside this range, anything can happen. Okay, they can do what they are doing. Why? Because you are inside this range. So it's either we break down or we break up. If we are inside the range, the best trades, let's do this. Yeah, I think I'm done with going through all this, right? So let's just use this as a lesson. Okay, before I do that, let me quickly check out these trades. Let me check this one out and see how beautiful the breakup reacted in here. That's why I like the breakers. Yeah, if you pay really attention, as soon as we break, price retest and then reject and start going lower. And this didn't pull back and it's dropping. I am fuming with this trade. I'm fuming. Okay, so the only trade that we've managed to grab is this one. If you did get in, and that's it. And euro has now pulled back to that. This is the retest. So breakers, we have retrade and retest. Okay, so this is a retrade and this is a retest. This one is the quickest one. Sometimes it does this and it never comes back down. And then this, if it does do this, that's a retrade, and you can get your entry there. That's giving a second opportunity to get an entry. All right, so now let's jump back to this one, and then I'll do it and conclude for this morning, and then we'll come back down for the afternoon session. All right, so if you look at market structure, okay, we broke down here and we did have what I just explained. That was a break and a retrade. Yeah, we broke down here and that was a retrade, and it fell short to retest. Yeah, so retrade, retest. You want to make note of that so that in future you can know the difference. So once we break down, there's going to be a quick retrade. All right, once we break down, there's going to be a quick retrade, and then in future price will come back for a retest. Yeah, so the best one is this one here, because most of the time when it does the retrade, it runs away quickly. Because the breakers, what you need to understand about the breakers is they use the down candle for a purpose, and the purpose of the down candle was to grab liquidity, was to go and kill off people's account, or to grab I showed you the actual players in the market, which is the central bank and the institutions. So the run on the stops is running central bank, running institution stops. It's not your stop, it's institution stops. So the run above this high, okay, it's not your stop, that's institutional stops. Okay, those with deep pocket, that's their stops there. So once they run it and break down, that down candle that they use to take price up there, they are in a hurry to get out of that trade. Okay, because that will be under, or it'll be in a loss once price breaks down. Okay, so this quick retest, this quick retrade allows them to offload and then reload. Yeah, it gives them the quick offload and reload, and then price sends down. So if you do get the retest, is most often the best entry. The retrade, when price gets back up here, it's 50-50. It can go through it, or it can act as again resistance and then send price lower. Okay, but you want to really all the time if you're taking the breaker trade, you want to focus on getting this one. Okay, if we drop back down to 15 minutes and we go to this, you can see how he has quickly run away. Let's go to pound Aussie, and then see how the retrade here. After we broke down the retrade, price never came back, and then when it came back for retest, see how price behaved. So you want to really focus on the retrade. Well, as soon as we break it, that's where you want to get an entry. So your breakers, you want to hawk them. You want to be like a hawk. No hawk. No, this bed, maybe I'm not pronouncing that word properly, but I want to be hunting it down like this. Okay, you need to be fixed, and as soon as you see it, you grab it. That's what you want to do with the breakers. All right, so let's go back, and because I saw it on here, so I wanted to re-emphasize on that. Okay, now where's my pen? Okay, so I will be talking about, and I'll use just about 10 15 minutes for this. I don't want to spend too much time. It's not necessary. You're gonna understand it because you already know market structure, and because you already understand market structure, it's gonna be very easy to understand, right? So when we do have market structure break like this on any time frame, you always want to, is because I'm doing this lots of pairs. Yeah, I'm doing these lots of pairs, and I'm always going back and forth. If I was to just do my personal kind of trade, okay, then you're gonna see me have this high, that low highlighted, and you see me have something like this: active daily range low, and then active daily range high. So what that tells me is I have a range that market structure is trading in. So you're trading between this high and that low, period. So if I want to take a trade, if I'm bearish, I want to be selling above 50%. Yeah, so if 50% is here, I want to be selling above 50%, and above 50%, to be precise, where will I want to sell? I want to sell the breaker and the last up candle. That's it. Those two areas is what I'm interested in. I'm not interested in anything else. Okay, I don't trade a fib. In my personal trading, I don't trade a fib. The fib is just a tool to measure. I don't trade that. So above 50%, when I have my range, this is the areas I want to do business. I want to be selling, right? And then once price hits this level, what I'm expecting is for price to now break outside the range. I want to see price does this, to break outside the range. So we now have a different range, which would be this high to wherever that particular low will form. So let's say that low will form here, then I have another range. Okay, that will be your next trading range. So if we come back down here and we start pulling back, you have that high to that low, and then you'll be trading inside that range. And then inside that range, you find what you want to be trading. You want to be trading above 50%. Above 50%, you want to be trading there, and you look for specific things that you want to trade. So you could trade the last up candle. There could be a breaker in there. You could trade that breaker. All right, but if it does this, which is the purpose of this lesson, if it does this and it doesn't take out this low, okay, if you've had a trade from here and it gets down here and it doesn't take out this low and it start pulling back up, you want to be really careful going forward. Why? Because if it doesn't take out this low and it starts pulling back up, this is when a lot of losses happens. Yeah, because now price has the ability to trade all the way back up here and still be valid to go all the way back down. and it becomes hard and frustrating to know exactly what price is trying to do. So on this particular time frame, it can be tricky to say, okay, I'm going to buy here, and then if you buy here, price might turn around and then come back down and take out this low. Okay, and you might decide to sell, let's say sell this last up candle, and then price might decide to go up because we are still inside the dealing range, which is this high to that low, or that high to that low. Yeah, so because we are in that dealing range, you will find yourself fighting price direction. Yeah, you find yourself fighting price direction. So it's important to understand your dealing range, which is your market structure high and structure low. You have to determine that on every and have it on your chart so that you can avoid these kind of situations. So this is just a daily, so it's gonna take time. But if you're on the 4-hour and you're trading the 4-hour range, so for now, for example, if you're trading the 4-hour trend, okay, you want to have this as your current active high and your current active low. So because you are trading in here, be selling your last up candle, which is model up here, and you expect price to do a comeback and take out this low. So if you do get an entry, let's say here, right, and hits it and then comes back down and it fails to break it and you see it coming back up, you want to be out of the market. Yeah, if it fails to break this one, take something or take everything off and be out of the market, be done, because as it pulls back inside here, this is going to make it hard to trade, to get a direction, because it can go back and forth and keep stopping you out, and then finally does either that or it finally breaks down. Okay, so the idea is we are trending down, we hit this, we should break down, and then we continue on the same cycle. But if you start seeing it doing this, doing that, doing this, doing that, you want to be out, because there's a high probability you might force a trade and it's gonna stop you out. Yeah, and that's something that has happened to me over and over. It took me time to understand it, because anytime I take the trade, I'll be inside the dealing range. So let's say between this high and that low, price has pushed down and then it's pushed back up. So in here, I'll be trying to sell short and then it run me out and then reject, and then trying to go long and then it run you out and then you go up. Okay, so that kind of situation, because you're stuck in that range, price is gonna keep doing back and forth, and then you end up losing trades. And that's what I keep warning about this one, based on the daily, because it can keep doing what it's doing, and if you don't have a good understanding of your trading plan and what you're looking for, this can kill you. Yeah, I mean, not kill you physically, but it can kill your account, because we need to break outside this range. Okay, we need to break outside this range. Fair enough, it doesn't. Even this one, this two, okay, where price went up here, we need to break down, and it didn't, and it's rejecting. So if you try to pick any direction inside here, there's a high probability you're gonna get what? Stopped out. Okay, so if this last up candle hits, it should go down and break this, and if it doesn't, you stay out. Yeah, you stay out, preserve your capital, and let price show you what it wants to do before you attempt anything. Okay, so that will be something that you have to always check out based on your market structure. So every time frame, whatever time frame you trade, and I don't think everyone is going to trade all the time frames, you have to have specific ones that you trade. So I trade weekly, daily, 4 hour, and then sometimes 1 hour. You can go and trade daily, 1 hour, 15 and 5, or you can trade 4, 15, 5 and 1. Okay, don't trade all of them. Maybe I'll do another lesson on that time frame selection. You need to know the kind of trader you are and then pick the time frame. I give you my time frames that I trade, and you can see I've made them my favorite. So I trade the weekly, daily, for I look for trades based on these time frames. But you can look for trades based on the daily, 1 hour, 15, or daily 4 hour, 1 hour, depending on how your time that you have to be in front of the chart. And so once you determine those time frames, then you highlight your market structure on those time frames. So you're gonna have on your weekly, your weekly structure high, your weekly structure low, your active ones, and then on your daily you're gonna have the same thing. And then on your 4 hour you're gonna have the same thing. So when you're trading, you know where you are in terms of structure. Actually, let's zoom in here. So my last low was here, and my last high was there, and then we broke to the upside there. Okay, so I'm bullish. For me to be bearish, we need to come and take out this low. Right, on the 4 hour, based on the 4 hour, we are bullish. So the price went up, came back down, went up, came back down, went up, came back down, went up, and then we broke down. So my structure high is here and my structure low is there. So now we need to break outside. Structure high was here, and then we broke to the upside here. Okay, so my structure low is there, and we are bullish on the 4 hour. Okay, so bullish on the 4 hour. If I want to be bearish, then we need to break a low before I am bearish. If not, then I am bullish on the 4 hour. Let's see, I think I've got a question. Is there opportunity for USD for New York? I think I've already gone through that. I said price has come to a high time frame level, so we are looking for smart money to come in the market. We are looking for elephant in the room move. We want to see a big move away. We want to see a big move away. If we don't see that, we're not interested. We need to see smart money in the market to give us a hint that they want to go in the direction that we want to go. Right? They did that on Euro New Zealand by doing this. Okay, that's smart money in the market by breaking down. Okay, with these large candles on you don't see none of that on this. You don't see none of that on these two. So there's nothing to do on them at the moment. Okay. We have to be patient and wait. So if during New York they do present themselves by shooting up, then we know that they are in the market. Then we can start paying attention to them. But for now, they are dead, so you don't want to be doing anything. Alright, so I'll end here, and then I'll see you guys in the afternoon for the afternoon session. All right. Do not fall straight. The week has just begun. Right, the highest probability trades I highlighted, that one, this one, if you do get up there, and then the euro, which is selling this breaker, and that's it. Those are the 3 trades that I saw that to me worth taking advantage of. The rest, not interested. Okay, so take care, and I will see you in the afternoon session.